Welcome now to our special segment, What the World Wants from India. Typically, before the budget, we ask a bunch of opinion makers and expert India observers from across the world what the world is expecting from India, from the Indian budget, and of course from the Indian economy as well. Joining me now is a veteran India observer and author of some seminal books, Sanjeev, Sanyal, Global Strategist and Managing Director at Deutsche Bank. Good morning, Sanjeev. Good to have you with us. Well, India received a goodish bit of money last year from the global community, 16 billion, not the best in terms of run rate, but fairly decent. Do you think India is still up on the radar of global investors?
Absolutely. I think India looks very good. There is an amazing opportunity here for India to really go up into the next level. And so I think the world is watching. They will watch the budget very closely, of course. But it's not just about announcing intentions. Step-by-step implementation of some of these measures is important. But I think on the whole, given what happened with the coal auction, for example, diesel deregulations before that, so I think by and large people are beginning to feel that, slowly but steadily things are getting implemented.
Okay. Is there any investor ennui or tiresomeness on the part of investors that things are not moving at a fast clip? I mean, for no fault of the government, they are not able to implement some crucial legislation. As well, there has not been any dramatic action on the ground. I mean, witness PSU banks, their capitalization, a host of areas where work has not been done. Is there any investor ennui about it?
Well, I mean, people will always complain that things are not happening fast enough. As I mentioned, several interesting things have already happened, as the coal auction, diesel deregulation. In fact, not many people are paying attention, but a serious cleanup is happening with all these internal corruption and espionage cases. So things are happening. I think there could be one thing that could happen from the budget is not just the fiscal, but providing some sort of a roadmap against which people can measure progress. I think that would be very helpful, because that would allow people to gauge how fast the progress is being made and what is the direction in which people are getting. So some sort of clarity on that front would be much appreciated. Okay,
actually, let me address that question straight away, which is the purpose of this interview. What exactly are foreign investors and people like you expecting the budget to deliver?
Well, I wouldn't know about expectations, but these are the following things I would like. One is a serious and radical simplification of the tax structure. India has one of the most complicated tax systems in the world. A radical simplification would be much appreciated. It would not just simplify and make business easier to do, but also it would mean that the focus would shift from squeezing the few people who actually pay taxes and shift it towards broadening the tax net. So I think that would be an important step. Secondly, I think simply the way that the budget is presented could be improved. It's a very opaque document. You have all these plan and non-plan expenditures. Nobody really understands what is the real difference between them. We have gotten rid of the Planning Commission. We now need to get rid of that whole thinking process and tell people clearly exactly where things are getting spent.
Okay.
And I think finally one big important step would be to, as I said, not just focus on the fiscal, but provide a broader roadmap of, the broader economic agenda.
All right. I'll come back to you for more details at this point in time. Jim Walker, the Managing Director of Asianomics, is also joining us, a long-time veteran India watcher. Well, Jim, good to have you with us today on this show. Tell us, since we are in pre-budget mode, what are your expectations? What will be the 1, 2 or 3 numbers or points that you will look out for in the budget?
I kind of wonder when India is not in pre-budget mode. It seems to be in pre-budget mode from one budget to the next. But it is such a big feature of the economy every year, which worries me. I must admit that so much emphasis is placed on a 2-hour speech, and so much expectation is built up every year around about it. I mean, to be quite honest, what I'm looking for is pretty much steady as you go. I really don't want the government to be thinking along any revolutionary lines or anything spectacular. I think we all know that GST is going to probably be a feature of this government's budget announcement. There's going to be commitment to fiscal consolidation, which I think would be a major positive. And there will be, I think, a lot more emphasis on capital spending and infrastructure spending than we saw in previous governments. These are the kind of things that I would be looking for, but I don't really want them to be doing too much.
What about the fiscal deficit number itself, Jim? The given timetable to the government is that it should be 4.1% this year and 3.6% next year, FY16. Would it worry you if they reneged on that?
I don't think they need to. I think, budgets are always a bit of a... In fact, your previous guest was saying they're opaque. And to be quite honest, they're a bit of a game. You can add revenues here and reduce expenditures there, and you can usually get the number that everybody's looking for. What I would very confidently predict for fiscal year 2016 is that the budget will be met and exceeded in terms of the fiscal downside. In other words, that they might set 3.6% of GDP as the target, and they'll achieve closer to 3, or maybe even below that. And the reason for that is purely on the revenue side, and the fact that India by that time will be motoring. I know you've got GDP numbers that are now telling you that the Indian economy is booming already. I think I've got some problems with the GDP numbers. But I think through the course of 2015 into 2016, we'll see significant acceleration in the Indian economy, and therefore significant acceleration in tax revenues. We're looking at a very positive environment for the fiscal consolidation plan over the course of the next 5 years.
Okay, that's positive. In fact, a lot of people were worried that last year the government assumed a 19% growth in revenues, partly because of a higher assumed tax buoyancy, which didn't materialize. But, well, this year, if you think that tax buoyancy can be assumed, that'll be a big relief. But do you agree, Sanjeev, Sanyal, with this? First of all, would the 3.6 number be very sacred for you? As well, do you think that this time the government can take the liberty of higher tax revenue expectations?
Well, the number 3.6 is not that sacred. I mean, obviously, you don't want a huge, miss. But, a small miss on either side is not a very big deal. I think there are a few things that provides a bit of a buffer for the government. One of them is that although it's not really the government arena but the reserve banks, but I think there is a scope here for reducing the cost of capital radically. One of the reasons you have this large deficit is simply that the interest cost of debt. And I personally think that right now there is a scope for bringing down interest rates quite dramatically, which the biggest beneficiary of that will obviously be the government. There are, of course, even second-round effects from the fact that the corporates will then also pay higher taxes and so on. But directly, the government will benefit from this. So I think some thought needs to be put into how to bring down the cost of capital, and that would, again, provide a fair amount of cushion to the government to do other things and also to bring down the deficit.
Okay. There are some economists who keep telling us that they would be okay with a higher fiscal deficit over 3.6%, provided the revenue deficit and the primary deficit show a definite decline. Any thoughts on that, Sanjeev?
As I said, that exact number is not sacred to me. It really, it does matter how that deficit is being arrived at. And of course, if it is coming from, major investments and capital expenditure, it's always good, because that would suggest that you are investing into the future, and presumably the economy generally and the government will generate revenues out of that. So yes, it matters quite a great deal how that, the mix of spending and taxes that generates that deficit does matter a lot, yes.
Jim, Before we went into the break, we were talking about Sanjeev expecting a lot from the Reserve Bank. What's your own take? Do you think the Reserve Bank has got a lot of leeway, that it has more or less reined in inflation around the 5% mark? How much of interest rate cuts are you expecting?
Yes, I think Sanjeev was spot on when he was saying that there's substantial scope for interest rate cuts. We've been looking for between 100 and 150 basis points in rate cuts this year. I still think we're going to get them. I must admit, I don't really understand the Reserve Bank's strategy at the moment. I don't really understand why it would cut interest rates in January, 2 weeks or so before a monetary policy committee meeting, and then have an MPC meeting and say, well, there's been no substantive moves further that would allow us to cut again. That just doesn't make any sense to me. The substantive moves in India have been happening for the last 4 years with the deceleration in money and credit aggregates. That has put inflation completely under control in India, and it's now time for the Reserve Bank to get a bit more aggressive, start cutting 25, 50 basis points maybe on a meeting, and get interest rates down 150 basis points by the end of this year. As Sanjeev says, helps the government, helps corporates tremendously in terms of business costs, and will just improve the fiscal position and economic growth rate in India substantially.
Since you are at a perch where you can even watch how the global trends are moving, Jim, what's your sense? Can India continue to expect a benign commodity cycle? We saw, of course, crude prices, at least for the near term, bottoming out at $45. What will 2015 hold in terms of crude prices in particular and commodity prices in general? Can India take some hope that this cycle will continue?
Yes, I think so. Our view of China, and China really is one of the main driving factors for commodity prices, is that we're still between 3 and 5% GDP growth this year, and that GDP growth will be very substantially driven by the services sector rather than by manufacturing, property or infrastructure. So therefore the resource intensity growth in China could even actually be negative. We could see substantial, I think, falls in demand for iron ore, oil and other commodities. And that leaves us short the commodity complex as one of our global strategy calls. And I don't think we'll be changing that for 2015. So I think we can look forward in India, where that's a significant positive for the economy. We can look forward to low global commodity prices for the full year, if not for the next 2 to 3 years.
Okay. To get you into something similar, a similar theme, Sanjeev, India cannot expect too much by way of a global growth impulse which will improve production or exports. But where can the trigger come from? Do you think the trigger for growth to break out of this 5.5 mold comes from lower interest rates? Or do you think some necessary pump priming is needed from the budget, from the government? Sanjeev. Okay, we're not able to get through to Sanjeev. We'll reconnect with Sanjeev in just a minute. Jim, you were very confident that India is going to find a great deal of tax revenues because of a much more improved growth situation in 2015 or in FY16. Where do you think that trigger comes from? We've just put behind a fairly disappointing earnings season, among the most disappointing in several years.
Yeah, although I think that's really the trigger. I think we've now seen the trigger, which is that we've seen a bottom in the earnings cycle. Companies have been deleveraging in India. Balance sheets have been improved upon. There's been cuts in capital expenditure over the course of the last couple of years, despite what the GDP numbers say. And that, of course, is the element in the business cycle which always cleans out companies, that allows them to get back on a level footing. If we then see interest rate cuts, it gets business costs down further. And what we're at the moment is just the bottom of the cycle in business terms. That's the trigger. Businesses by nature want to grow, and they want to find opportunities for more profit and for more growth. And I think that's what faces Indian companies going forward. I think there's a benign government backdrop to that now. There's much more confidence in India amongst the corporate sector. There's a tremendously competitive currency if they really wanted to move offshore into export markets, although I think that's probably a secondary feature of India. But we've got the springboard for greater economic growth. It's already there. It's just the business cycle and the way that companies have responded to it over the last 2 to 3 years.
Okay. Well, actually, when we speak to a lot of India Inc. representatives, corporates, there isn't that confidence that they're going to see growth over the next 3, 4, 5 quarters. Some people even put it at 6 quarters. Before we lost our connection with you, Sanjeev, that's what I was asking you. Where do you expect the trigger for growth to come from? Will this big interest rate cuts that both of you are expecting be the big trigger? Or do you expect that the government should do and will do some essential pump priming, maybe some big infrastructure spend?
I think, first of all, you have to be clear that a reduction in interest rates is a necessary, but it is not a sufficient condition for getting a long growth cycle out of this. So, yes, you need a significant reduction in interest rates, but of course you need policies being put in place to take advantage of it. Now, some of that are general cleanups, for example, reducing corruption, which I think a major initiative on that is happening right as we speak. And of course, it would be wonderful to get the infrastructure cycle going again. Part of that is, of course, bringing interest rates down, but also putting in place a roadmap of, these are the kinds of infrastructure projects that will come on stream at this point in time. That would give a great deal of clarity to companies on how to go about investing. So I think the key here is not just looking at the budget for what are the fiscal numbers going to be, but to get a sense of what is the future plan, so to speak.
Okay. Well, Jim, you were very clear that, you're not in, you don't want to join the herd in terms of this budget hype, and that the government should be an ongoing and is likely to be an ongoing performer. Generally, what are you expecting from policymakers?
Well, as I said, as long as they make the commitment to medium-term fiscal consolidation and make it in a serious and credible way, not producing massive revenue forecasts and massive expenditure cuts that we know won't happen. As long as it's a credible budget with an overarching strategy of really just moving forward incrementally, then I think they can start to do things around the edges which don't need to be announced in the budget. They can be a different set of policies. For example, there will be disinvestment of some sorts in India over the course of the next few years. I'm quite sure about that. I think the states hold a lot of the cards here. I think one of the big successes of Narendra Modi was that he was elected as a chief executive of Gujarat for his success in getting the state moving. The centre can play a huge role in allowing competition between states to get the economy moving at the state level. And these are the kinds of things that I would really want to see the government focusing on, rather than trying to do too much at the centre, because that's always going to be easy to oppose. It's trying to devolve power back to the state governments and give them incentives to actually compete with each other to get things rolling. And I think that's happening.
Once again, Jim, from your perch in Hong Kong, where you watch investors look at a whole lot of asset classes and markets, India kind of benefited being perhaps the least dirty shirt in an otherwise dirty laundry in 2014. Will India be one of the leading lights? Where would you place it in terms of asset markets or equity markets in a pecking order, in your pecking order?
Well, we have an overweight in India in our regional portfolio, but we've also got India as one of our high conviction global strategy calls. So it's not just a question of saying that India is looking a bit better than other people around the region or around the emerging market universe. Our confidence is much, much more far-reaching than that, that this is the next 5 to 10 years of an India story that has never been told before, where the government is beginning to get its act together, just levelling the playing field. Interest rates will be falling, growth will be accelerating through the business cycle, the economy is much more connected through mobile technology, the internet. Everything is falling in place for India to have just a massive 5 to 10 years. And that's what we want our clients to participate in. That's why it's an overweight globally for us rather than just regionally.
Well, this is a glorious point at which to end this conversation. But Sanjeev is an economic historian. Sanjeev, you agree with that? You'll echo that view? You'll be that optimistic?
Yeah, absolutely. Many of the preconditions for a long growth boom are falling in place. The demographics are in place. There is an opportunity here to bring down the cost of capital very, very significantly. The government is working, slowly perhaps, but it is working quite steadily towards changing a number of structural problems, including dealing with corruption on a major scale. And, you know, there will be niggling problems over land acquisition and so on, but I am sure that will get ironed out, given that we know the government is focusing on it. So I think the opportunity is certainly there for a really long, good, innings.
All right. Sanjeev, Jim, it was a pleasure speaking with you, and we conclude this conversation on a very high note that from out there, from Hong Kong and Singapore, India looks a little more shining than it looks perhaps here on the ground when we are in India. Thank you very much for joining me on this conversation on what the world wants from it.
Thank you.